Debbie Marcoux is licensed by the Department of Business Oversight under the California Residential Mortgage Lender Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida 76508, Georgia 69178, Illinois 031.0058339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington 237926. ID cycle points DBO 1666881, Arizona 101648.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, well, welcome to Mortgage Mom Radio. I'm Debbie Marcoux, and as always, I've got my Heidi Schlegel points with me. How you doing, Heidi?
I'm good. How about you?
I am great. So we are Mortgage Mom Radio, in case you have never tuned in before. And what do? Well, we bring you all of the information that you need about what is going on in the real estate market. So we're talking about mortgage lending, real estate, how to buy a house, how to refinance your house, tips, tricks, advice, all that good stuff. So if you have any questions whatsoever, what do you guys do? Well, you give us a call. It's 844-935-3634. We are live on YouTube every Wednesday at 5, unless, of course, there is a holiday, then we go dark the day before. So I'm going to bring it up right now. We are not on next week. Due to the Easter holiday, we are dark. So you will not see us on Wednesday on YouTube, and you will not hear us on radio on Saturday. So just keep that in mind if you're trying to find us and you can't. We're not on. We're gone. But we're on every Wednesday, live at 5 on YouTube, and we're on Facebook, and we are on Twitch. And we want to make sure that you guys are asking us your questions. Anything and everything that you can think of that has to do with real estate, you let us know. And I am absolutely, if you are listening Saturday morning, you guys are absolutely missing out right now. Heidi's cat has decided that he or she, is it a girl or boy? She is part of the show today. Jumping on the couch behind her and crawling up the wall. I'd love to know what goes in their minds. Like, what is she looking for right now?
I have no idea.
Yeah.
Just, I think she sees things we don't.
Yeah.
And she just goes for it.
All right. Well, look at her little hair on her ears. It's so cute.
Yeah.
And if you guys are listening Saturday morning, you got to go and you got to watch us. You have to see us do it live. We take the sound and we send it to radio, and it is what you get. But this cat is like completely bald, but it's got some hair on its ears. It kind of looks funny. Sorry.
She's about to give you a up close and personal view.
She is. She is. Yeah. And there it is. All right. Well, once again, welcome to Mortgage Mom Radio. If you guys are watching, we want you to say hi. Let us know that you're there. Throw something into the feed. Tell us, thumbs up or what you doing or how's it going. And if you do have questions for us, we want to hear from you. We want you to ask us your questions. So I can... Yep, go ahead.
Yeah, we've got one comment on YouTube from Erica saying hello with a wavy hand in the cat face.
Nice to see you, Erica. Thank you for watching. I haven't seen the rest of the family join in yet. They are our biggest fans, so hopefully we'll see them soon. Again, if you guys are on Facebook or you're on YouTube, you're watching us, just go ahead and put something in the feed. Let us know you're there so that we can say hi to you. And we want you to ask us those questions, anything at all that has to do with mortgage, real estate, lending, real interest rates, anything. We want you guys to ask us those questions, and we're going to answer them for you, and you're going to see us do it live. If you want to call the office, I know I said this already, but if you want to call the office and you want to get on the calendar to talk to me or anybody from the Mortgage Mom team, you can do that. It's 844-935-3634, and we would be more than happy to help you. So we have not done catching up with Mom. So last week was St. Patty's Day. We did a really super short stint on Wednesday evening for the live, just, saying happy St. Patty's Day. Hope you guys had a good one, or you're having a good one. And on Saturday morning, we actually gave everybody a free hour of commercial-free music. So I haven't been able to catch up with you, Heidi. You weren't on with me last week. You weren't feeling well. You were sick.
No, I was.
Yeah.
It was not a good St. Patty's Day.
No,
for me.
I believe it.
I didn't even honestly know it was St. Patty's Day until the next day after I'd missed it.
Right.
Because I was sick. I was in bed all day. It was awful. I got the stomach bug. I don't even know what it was, but it was not a good day for me.
No, it didn't sound like it at all. So
No.
I'm happy that you're feeling better. Trust me.
Me too.
I don't like it when you're out, not even for a day. It's really, really hard.
Yes.
So what else is going on though? Like, let's catch up. Anything personal, work wise? Anything you want to talk about?
You know what? Just had a great weekend. Got away from the house, which, when you work at home, you don't realize how much you actually need to leave your house.
Yes.
So, some friends of ours recently moved to Havasu, so we went, and really, we actually went. We were going to go to the rodeo. Never made it to the rodeo, but we went and walked around the London Bridge, and honestly, just did a ton of walking and just enjoyed not being home.
Yeah, that's
I
fair.
honestly think I could have gone anywhere.
Yeah.
I don't think it would have mattered.
Right.
But we had a great time. Me, my husband, our son, and we just, drove Friday, Saturday, drove home Sunday, and it felt like I had the best vacation.
That's awesome. That
just
is awesome.
to leave the house.
Yeah. No, I get it.
So it was good. Work's been good, crazy, and not necessarily the amount of loans we're doing, because we'll talk about it a little bit later, but rates have been going up day after day after day, and luckily we're seeing it go down a little bit, and we'll get into that. But it's just been a lot of conversations, a lot of what should I do, what should I not do, purchase wise, refi wise. My son, our oldest son, passed his physical for the police academy, passed his written. He's in background, just had an interview for his background. So now it's just kind of the waiting as to, whether he gets to go to the next step. So that's exciting.
Nice. So he passed his psychological?
He hasn't done the psychological yet. That's, I believe, like the last step
Gotcha.
before he gets into the academy. So
Okay.
it's
Well, there went my
physical.
Joke. I was going to totally make fun. Like,
Yeah, we're nervous about psychological, actually. No.
it is a hard thing, and I think that there's, very normal people that don't pass it.
Yeah.
So I'm sure he's probably panicking right now. He's probably freaking out.
You know what? I think, the background, I didn't realize how intense the application is for background. I'm thinking, no big deal. You fill out your information. He has nothing to hide, right? No criminal, no this,
Right.
no that. I'm thinking, big deal.
Yeah.
Oh, no. It's who have you ever lived with? Who has ever stayed at your house for longer than X amount of time? I mean, some of the questions, which I won't say on here because it's not appropriate, but I was blown away that they're asking these questions about people yourself, all this stuff. And he had to go back to people he hasn't spoken to in 10 years
Wow.
and tried to get their email address, their address, and I'm going, I wouldn't even be able to find people like that.
Right.
Or
Yeah.
get their information, or it just was really intense, just the application to start the background check. At that point, I would have been like, I already failed.
Right. Exactly.
I have no idea. I don't know where I lived at this point or how I met this person 20 years ago.
Right. Well,
Yeah.
good for him. Good for him that he, stayed on target and got that part done, and he's past
Yes.
that piece, and so now it is on to that last emotional roller coaster. And
Right.
then,
Yes. So now it's just waiting to see if he passes the background, which, is not just as simple as, are you a criminal?
Right. Yeah.
So
yep.
we'll wait for that, and he'll get that information, and then see if he moves on to the psychological and the polygraph.
Very good. I like it. I
Yeah.
like it.
So it's exciting.
Yeah.
Yeah.
All right.
So what's going on with you?
Well, before we get into Debbie, got a couple quick comments. Dad just let us know he's in Deb's car on the way on 55 going home, which means that he made it home safely.
He did.
Nice.
And Houseboat Billy says, hello, ladies. Sorry I missed last week, but the fishing was great.
Oh, awesome. Houseboat Billy, we love that. Don't worry about it. You didn't miss anything. We got on for about 10 minutes and said, have a great St. Patty's Day, and we'll be back next week. So don't worry. You didn't miss anything at all. It was an easy, quick one last Wednesday. And so you're asking me what's going on with me. So this weekend, actually, my sister did a little surprise party for my brother-in-law, and it wasn't any special birthday. It wasn't like a big milestone birthday or anything, but it was just, I think, kind of something that we needed to have. Everybody's been away, and all of the holidays, have been scarce. And and we've all been staying within our bubble, but I don't know. I think she just kind of felt like we just needed time together as a family. So
Yeah.
she threw a little party for him that he didn't know was happening. And he actually, my older sister flew my dad in. So it was a surprise. Nobody told us he was coming. He didn't tell us he was coming. And actually, I had called him and asked him if he wanted me to fly him in for the party. And he had to make an excuse for me, saying that he was really too busy and couldn't get the hours off work. So then at that point, and it was funny because we were laughing about it later. And he's like, they had just done it for me and it was a surprise. And then you called me and said you were going to buy me one. And I didn't know what I was going to do if I had 2 tickets to get there. So anyway, so he came in. We weren't expecting that, but it was really nice because we haven't seen him obviously since before everything, really got shut down. And so it was really nice. And he just flew home today. So that's why he's letting us know he's in the car and on his way home from the airport. But it was really nice. It was, very unexpected. And I might have had a little bit too much to drink on Saturday night, so I didn't feel real great on Sunday morning. I was struggling, and it makes you want to think like I'm just never gonna do that again.
There weren't a whole lot of people feeling great that morning, to be honest.
Yeah, it was
sure.
it was pretty rough. It was pretty rough. It was my family. We all had a good time, and then Dad was there, which just made it more exciting. And
Right.
so everybody probably went a little bit further than they needed to. But it was a good time. So that's really what's been going on, other than, like you said, just working really hard and making sure we're closing out the pipeline and starting new loans for new people. And, work's just work, right? It's
Right.
been busy
Yeah.
and it's been kind of a weird time. So I think that we should talk about that. I think it's a good time for us to bring that up and to start talking about it. This is obviously a mortgage show, but we love to do our catching up with mom. So everybody listening, you guys know what's going on with Debbie and Heidi now. And if anybody has any questions, please feel free to reach out, put your questions in the feed. We want to hear from you. If you're listening on Saturday morning, remember, if you guys watch us on Wednesdays on YouTube, we are live and you can ask us questions right there and then, and we're going to answer them. So, some of the things I kind of want to go back, right? I want to talk about a lot of things. So, maybe 3. Okay, we're going to talk about interest rates because interest rates have definitely moved quite a bit. And we're seeing a difference in application volume. I want to talk about making an offer on a home right now because it is very hard. And we've talked about that before, but I do want to get a little bit more in depth in that. And then that's going to lead us into USDA, which is going to be our workshop for today. So, some good stuff, right? We're kind of action packing it for you guys in this episode. So, number one, interest rates have definitely gone up. And over the last 5 weeks, and yes, it has been 5 weeks, and it feels like it was just 2 weeks ago that they started to go up, but it was actually 5 weeks ago that they started to creep up. And then we had a couple of very, very aggressive 2 weeks. And then we've had slow progression, because it'll go and kind of slow, go and then kind of slow. But we never got an actual dip down. It was literally go, stop, right?
Yep.
And they've come up quite a bit. I mean, we're probably, I would say, about a good 0.5 point, maybe more in rate higher than we were 5 weeks ago. And, that's really across the board in all products. So the application volume has obviously slowed down because somebody that had an interest rate before of maybe 3.75 and could refinance at 2.75, that made sense. But now that they're 3.75 and interest rates are 3.25 or interest rates are 3.5, doesn't necessarily make sense. So applications are slowing down. Refinance volume is slowing down, which is okay, right? I mean, interest rates are still phenomenally low. I did put an application together today where the girl's going to save $900 by paying off a loan and an additional $400 by doing a refinance and dropping her rate from 4.75 down to, 3.5. So there are still a ton of people out there that if you guys are listening and you haven't done it, would you stop procrastinating?
I don't know how many times we can say that.
Right. Catch the elevator before it gets to the top floor, right?
Right.
You got to think of it this way. You're in Vegas and it's 30 floors and we're at floor 6. Okay.
Right.
Stop it right now. Push the button.
Right. Push the button. Don't wait till it gets all the way up to 25, 26, 27.
Right. Exactly. Get it done. The other thing that we've been talking about a lot because of the rates is, I've got a lot of people saying, well, I want to, pull some cash out right now. And then, what do you think? Maybe I should refinance, in 6 months, or maybe I should refinance in a year, and then I'd get a better interest rate because it's not cash out. And
Right.
we're in a little bit different circumstances, right? I don't know that in 6 months from now, rates won't be even higher than where they are today. So what we need to look at right now is a cash out refinance is more expensive than a rate and term. You've been thinking about doing the work on your house, and let me tell you, everybody does it in pieces. Gonna do the kitchen first, then we're gonna do the bathrooms, right?
Right.
And so you pull the money out, and then all of a sudden you realize, well, my goodness, we need more money because it didn't look right that we did the bathrooms, or it didn't look right that we did the kitchen, but then we didn't do the floors, or so
Right.
then they're coming back to do another loan. But now rates are higher. So this is a fantastic time right now. Pull it all out. Property values are high. You're going to get the appraisal you need. You're going to be able to get the cash in hand. You're going to be able to get into the interest rate that is lower, most likely than where it'll be come the end of the year. Pull it all out. If you don't use it all, pay it back. It's okay.
Right. Exactly.
Right.
Don't piece it.
Right.
And we've had a lot of people that have done that.
What do you got?
So
Alright.
What do you
don't
got?
do it today.
I was
Yeah.
trying to cut in before Heidi came back. Heidi,
That's okay.
can you sit back just a little bit? I can't turn you down anymore, and you're like blowing out our ears over here. So
Oh, okay.
Trying to be as loud as Debbie.
I love it.
Okay,
I love it.
perfect.
Yeah. But okay, yeah, no, but go, Heidi. I mean,
We've had a lot of our clients that have come and said, okay, I want to take out 40,000 because that is the quote I got on my kitchen. But when I thought of my kitchen, I thought of countertops, I thought of new cabinets, and I thought of a new sink. But I didn't think of all new appliances, and I didn't think of the flooring.
mm-hmm,
So now
then-
that that's all done and it looks amazing,
mm-hmm.
I also didn't realize that it was going to go into my dining room that now does not match at all.
Right.
So now I want to come back and I got a quote for that. And it's been 6 months, right? They got it all, but now they're hemming and hawing going, I've got the equity. I want to do it. Do you think I could get a lower rate or keep my payments the same? Well, maybe we could have, 6
5
months
weeks ago.
5 weeks ago,
5 weeks ago.
8 months ago, depending on when it was.
Right.
But that's not looking where the market is now.
Right.
So if you're going to do it and you've got these grand plans of grandeur to, redo whatever, just pull out what you can. And then like Debbie said, you get all your stuff done and you're like, hey, I've got 50,000 left. I've got 20,000 left. I've got 100,000. Pay it back to your principal.
Mm-hmm.
You don't have to use it all. You don't have to keep it. But do you really want to see where the rates are 8 months from now?
Yeah. And obviously, we don't have that crystal ball, right? We don't know
Right.
that interest rates are going to be higher. We can't tell you with 100% certainty
No.
that rates are going to be higher in 6 months from now. But if I had to put money on it, if I was in Vegas and I was throwing the dice, I would say that in 6 months from now, we will be at the same or higher rates than where we are today. That is just my opinion. That is the mortgage mom telling you guys where I think that things are going. And if, interest rates are going to be a little bit higher in 6 months from now, and then you're going to come back and try to get more cash out, why would we do that? Let's, there's before 2-part process was awesome. Today, 2-part process, not so awesome. And so, things will move and change based on the environment that we're in. And one of the things that is happening right now, where we've talked a lot over the last year, Heidi, about how don't pay points if you don't have to. Don't pay points. If it does, why do we say that? Well, if you're pulling out cash and the interest rates are higher because you're pulling out cash, don't pay the points. Take the higher rate, get the loan closed, get your cash, get the work done. Then we'll turn around, we'll do a refinance. Now you're not a cash out, you're a rate and term refi. We'll get you a lower interest rate. If you would have paid the points, you would have just been out the money, right? Didn't
Right.
make sense. Well, today, if you're going to pull the cash out and interest rates in the future might be higher, it may be worth it to take a look at buying those points. And then if because you want to not do another loan in the future. You want to be planning to not do another or have to do another, right? So we want to look at all of those different options, and things have to change as the environment changes and as the economy changes and as the numbers change and the rates change and the property values change. And this is what I tell you today is going to be different again in 6 months from now. So that's why we do this show. And that's why we never run out of things to talk about, because it's an ever changing environment of where are we at the time, right?
Right.
So that's just something that I did want to bring up to everybody is, again, if you've thought about doing a refinance, don't wait. Get on the phone, call, get on our calendar, talk to us. Let's talk about where we're at. What can we do for you? It's 844-935-3634. That's 844-WE-LEND-FOR-YOU. That is LEND and the number 4. But don't wait, you guys. Stop the bleeding. Get it started. Give us a call. Let's see where we're at right now today. Let's see if it makes sense for you. So number 2 that we said that we were going to talk about is buying homes, right? And that's been a really big hot topic lately too. So believe it or not, application volume for refinances have slowed down. Purchase transactions have not. And as a matter of fact, we are starting to get into the hot and heavy buying season. We are in spring and we are coming into summer, before you know it. And we have had more clients go to contract in the last 2 weeks than we have had in probably a year and maybe longer. Like honestly, even this time last year did not seem to be as busy as it is right now. And, it's really, really important to talk about what gets your offer accepted over somebody else's, especially when you're in a time where there's not enough inventory. I actually heard this. This is so funny. And I don't know if it's funny or it's not funny. I don't know. It's funny to me. But I read somewhere that there are more real estate agents in the United States than there are actually homes available for sale.
Wow.
Right.
Wow, that's interesting.
Right?
Yeah.
Yeah. So, I don't know if you call that funny. I don't know if you call that scary. I don't know what you really call that. I guess, I wasn't really picking my words accurately, but, a very interesting, right, piece of information. And there's just not a lot of inventory. We've talked about this over the last year, right? Mm-hmm. But it is at a breaking, it's at a tipping point at the moment. And I think that it's really, really important for people to understand how they're going to get their offer accepted and to understand what their real estate agents are going through to try to get those offers accepted. So, it's something that, I just think with us being Mortgage Mom Radio and people listening to us for advice and coming to us, asking us, how do we buy a house? How do we get started? I think that this is some important things that we can shed light on that we're seeing from our side, because we are not the real estate agent. We are not in the transaction. We're not writing that offer. We're not negotiating. We're not trying to get that listing agent to pick our offer over somebody else's, right? But we are seeing what comes in after that happens. What is on that contract? So what is the first thing that comes to mind for you when you're reading that contract, Heidi? What are you seeing over and over again that you would have never seen before? Call it
appraisal waivers.
Yep. 8-9 months ago. Appraisal waiver.
Appraisal waivers.
Mm-hmm.
Waiving the appraisal contingency.
Right. And, that is something that you have to be prepared as a buyer, that if you are waiving your appraisal contingency, number one, you're probably not going to get your offer accepted if you do not waive it. It is just something that is standard right now at this point in time. So what does that mean? Well, that means that if you offer more for that house than what it is listed at, which is number 2 happening on every single transaction, if your appraisal does not come in when the lender orders it at the value that you have offered to pay, you are waiving your contingency, which means that you are agreeing to bring in the difference between the appraised value and the sales price that you agreed to pay. So there are a lot of clients right now, obviously, that feel like that is crazy. It's insane. Why would you do that?
Yep.
I can't disagree with you.
I cannot either.
But it is what it is. It is where the market is today. It is the only way that you are going to get your offer accepted. So then what happens? Well, the realtor, again, working for you, is trying to do their best to make sure that they're protecting you, but they are also getting you the home. So they're
Right.
making sure that they're keeping the loan contingency and the physical inspection contingency in the contract, so that if the appraisal doesn't come in, they have something that they can fall back on to try to get you out of that transaction, or to be able to still go back to the other listing agent and the seller and try to negotiate for you, right?
Right.
But that puts the lender, that puts me, that puts Heidi in a really bad position, right? So
Yes.
some of the things that we're having happen are that we've got clients that are calling us and saying, so if I waive my appraisal contingency and the appraisal doesn't come in, can you just decline my loan? I can't just decline your loan. If you qualify for the home and my underwriter has underwritten your loan, which by the way happens before your appraisal comes in, and we've approved your loan, I cannot just decline it like arbitrarily, just decline it. So we've got to have reason to decline it, right? I've got to see that you don't have enough funds to come in with the money to make up the difference between the sales price and the appraised value. But most of the time, if that listing agent is smart, they're making sure that they're getting assets from the person making the offer to see that they've got plenty available and liquid to make up the difference between the sales price and the appraisal, right? So,
Right. They're asking for proof of this in advance. Like, you're agreeing to pay above and beyond.
show us the money
Show us the money.
before we accept your offer, right?
Correct.
So
Yeah.
there are situations where the client doesn't have it, and in that situation, we could have an underwriter decline that file.
Of course.
There is not enough money to make up the difference between that sales price and the contract.
Right.
But if you have a 401k that you do not choose or do not want to dip into, but you've got it and you could, I can't decline your loan.
Nope.
Right? So just make sure, all I'm saying is make sure that you're in it to win it. You're prepared for what is going on in today's market. You're prepared to get out there and be aggressive, and you're prepared to do whatever it is you need to do to get your offer accepted. And why do I say that? Because real estate agents do not get paid if you do not close on the home. So they could show you 75 properties, and you might never go under contract, and you may never get that property to close. They might write 15 offers for you and get 2 accepted, and you might make it halfway through the transaction and then for some reason have to back out, and the deal never closes. That real estate agent doesn't get paid an hourly wage. That real estate agent doesn't get reimbursed for gas. That real estate agent doesn't get reimbursed for mileage or tires or oil changes. They don't get reimbursed for anything. If you don't close, they don't get paid, period. So if you have a real estate agent that is calling you and saying, you're seeing this property come out on the market, and you're reaching out to them and saying, I really want to go see it. And they're calling you and they're saying, okay, that's great. I'd love to bring you over there, but you understand that this is about the price that I think that this property is going to go out at. Don't get offended. If you're not willing to write that offer at that property at that price, there is absolutely no reason to waste your time or their time to go walk through that house, because you're not going to get your offer accepted if you think you're going to walk in and pay the list price on that home. It's not today's market.
And also keep in mind that a lot of times agents, all they have to do is pick up the phone, call that listing agent, and be like, hey, I've got someone that's interested. Do you have offers? And they could be like, yeah, I've got 15 already, and we're ready to, make a decision on Sunday. Well, if you've already told them you're not going to go above and beyond listing, they already know there's 15 other offers.
Right.
There's no reason to even start down that road. Or they have comments in the NMLS, right? I always screw that up.
It's the MLS.
Messed that up. Sorry.
Multiple listing service.
Yes. Okay. And
Well,
there's certain things that I just,
we have our NMLS license,
NMLS,
which is where it gets all confusing. Yes.
Right.
There's no
Yes.
N. Yeah.
Whatever.
Yeah.
We all know what I'm talking about.
Yes.
So there's also notes that can say closing offers on X date, multiple offers on the table. So sometimes they don't even have to hang up with you. They just pull up their notes that are not public And they can tell you that. So it's not to be offensive. It's simply because it's not going to be the house for you at this time, given where you're at with
Right.
your offer.
Right. Yeah. And where you're at mentally, right? If you're just
Right.
jumping into the market, you've never bought before, and you haven't been out there for the last 6 months trying to get your hands on a property, you're probably not ready to offer more than what the house is listed for. You're probably not ready to remove your appraisal contingency. I mean, most recently I've seen appraisal contingencies removed. I've seen a buyer state that they're willing to pay up to $75,000 over appraised value if need be. I've seen them remove their loan contingency and remove their physical inspection contingency, buy the property as is, right?
Mhm.
And pay the seller to help them move out of their house.
Yep.
No joke.
Yep.
No joke, right? So
No
if
joke.
you're brand new and you've just never been in it yet, and
Mhm.
you haven't been in this environment, I mean, it's like a slap in the face. It's new. I mean, this is
Right.
fresh. This is new for me, and I've been doing this forever, right?
Yeah. We're getting some, very interesting purchase contracts. I mean, I'll tell you, I had one that I was working with a different loan officer other than Debbie, and we never even pre-approved these borrowers. And they waived all contingencies, offered to go, up to, I think it was 50 grand over appraised value, and pay all closing costs, not
Right.
just theirs,
The sellers too.
all
Mm-hmm.
sellers too. And we never even approved. I mean, we didn't, this first time we're seeing
Right.
these
Never
clients.
reviewed the file. Didn't.
Never
yeah.
reviewed it,
Right.
never anything. And of course, my first thought is, oh my God, like I could not imagine doing that, right?
Heart fluttering.
Heart
You're
fluttering.
shaking.
I'm thinking, I've got to find a way to get these people approved. Like they've just, and immediate release of their earnest money deposit of $21,000.
Yep.
It's gone. It's gone.
Gone. Off to
No
the
matter
seller.
what.
You don't get it back. Nope.
Don't get it back.
Nope.
But this is where the market's at. And I have never seen it like this.
Yeah. Yeah. I haven't either. Honestly, I haven't. And that doesn't mean anything. If you go back
No.
maybe far enough in history, maybe it did happen at some other time in, but in all of the years that I've been doing it since the mid 90s, I have not seen this taking
Yeah.
place. And what is this? Why are we in this situation? Well, you've got a lot of people that are still, not paying rent, and they're living rent free. So, due to COVID and everything that has gone on, and not being able to be evicted, and so there's properties that maybe a landlord would have probably put on the market just in the natural course of how long that people hold on to properties, and then when do people sell them, and so maybe something that would have been just a natural timing of time to put it on the market and sell it isn't happening because they're forced to hold, right?
Right.
And then you've got people that are still in forbearance that, because of COVID are not making mortgage payments. And if you are not making a mortgage payment and you're struggling, if you're on forbearance, you should be struggling right now. And
Right.
if you are struggling, then you're better off staying where you're at. You're better
Right.
off holding tight, not making that payment, not putting your home on the market and moving, right? So there's a lot less inventory because there's a lot less movement at the moment. There will be more movement. We will see more inventory. It will
Yes.
come. It is inevitable that it will come.
Right.
And when it does come, we'll see things ease back. We'll see things go back to normal appraisal contingencies and loan contingencies and physical inspection contingencies. We'll see all that happen. Will the property values tank? In my opinion, I don't think they will. I think that we're going to see some corrections happen, but I personally, I don't think that we're going to see a massive, massive crash. I just don't. I think that we're going to see more inventory, which means that there's going to be room for more negotiation between a seller and a buyer. And I think that we're going to see some correction, which I think would be great. But I think at the point that we see that and everybody's listening to it, if you're like me and you're addicted to YouTube and you're watching video after video after video about, the stock market and Bitcoin and ETH and, everything that's happening in inflation and, inflation, that is what everybody is talking about. What does that do to us? That brings interest rates up. When interest rates are up, then, it's going to be more expensive to buy that home monthly. So I think that we're going to see some correction. But if you're waiting for the correction, I think that your payment's going to be exactly the same as it would be even if you bought today at the rates being lower. So, again, I still, the one thing that doesn't go away over time is if you don't own a home, you need to buy one. There is never a bad time to buy. There is a bad time to sell, right? You need to own your home. Period. End of story. So, if you're ready to jump into that, we're bringing you this information and this education and this advice because we want to help you get through it. We want to get you to the right real estate agent referral. We want to get you fully pre-approved so that you've got an offer that stands a chance to get accepted. We want to help you through that to make sure that you're doing everything right. You're writing those letters of pick me, everything about you and your family, and you are fully pre-approved with pre-approval letter in hand, and your agent is copying us to those emails so that we can respond immediately and let that agent know, that listing agent, that we have fully qualified that borrower. We have pulled credit. We have run DU. We have, looked at the debt ratios. We've verified the assets. We've everything, right? You want a credit score disclosure? We got it. It's coming 2 seconds. So, let us help you get through that. Give us a call and get on the calendar and talk to us so that we can get you moving in the right direction and get you fully prepared for the very, very best possible outcome.
Yeah, absolutely. And, this weekend I was reading an article from the Wall Street Journal talking about what they're seeing, right? And everyone talking about, well, do we expect this huge downturn? Are we going to see all this loss? Are we going to see people walk away from their homes like, 08, 09? And they were talking about how the economists don't see that because with the homes being bought and even the inflation, people are putting more money down. People are being qualified at much stricter terms and guidelines now, right? Whereas when we saw the crash in 08, people were putting much less down.
Zero down.
Zero.
Stated income.
Stated income. Zero down. I mean, nothing was being regulated like it is today and has been, right? Since so many government guidelines and restrictions were put in place, a lot of which, in mortgage, we were thinking, oh my gosh, like you're going to kill the market. But we have 20% down, 25%. I mean, there's so much more being put down, and especially in what we consider the higher risk properties, right? The investment, the second homes, it wasn't 5% down, 10% down, zero. Oh, you told me how much you make? Fantastic.
You've got a great credit score. You've got a heartbeat, and you told me how much you make. Approved. Yeah. It's just not those days anymore. Yeah.
Yeah. So, I mean, it was a really great article. It was, a long article, but talking about the assessments of where we're at today and how it's such a huge difference of the pandemic affecting, the incomes of people and how they can pay and how they can't versus what happened in 08, 09.
Yeah. No, it was absolutely different. And so many people have so much equity at this point that why would they let their home go to foreclosure?
Correct. Whereas before they didn't.
Right. They were buying them zero down, and they were buying them on an adjustable rate with an interest only payment. And all of a sudden the interest rate adjusted and it went to a payment they couldn't afford, and they had no skin in the game, and the property wasn't worth what they bought it for. Why in the world would they fight through it and keep it and try to hold on? Why would you not just walk away? You've got nothing in it, right?
Right. They didn't lose anything.
Nothing. They
Not
lost
really.
nothing. Right.
Yeah.
I mean, the only people that would run a chance at possibly losing, being maybe upside down or losing something would be the ones that are getting in with the 3% downs or 3.5%
Correct.
downs, and they're buying them right now. This year where prices are getting to the top. But even then, those people are qualifying. We're getting their income verified. They can afford that payment. They're getting a low rate that when property values do come down a bit and do correct a bit, those interest rates won't be around. So that same house, even if they could buy it for a little bit cheaper, is going to cost them the same money, if not more, because the interest rate will be higher.
Exactly.
So
There's no benefit.
there's no benefit to just walk away.
No.
To just let it go, right?
Nope.
So, I don't see that coming. I truly don't. And I think that being prepared to buy in this market is something that is very important.
Yes.
And, if you guys want to know more, you've got more questions about it, you want to make sure that you're ready to buy, but you want to make sure you're getting out there and doing it right, you've just got to give us a call, get on the calendar, talk to one of us, talk to anybody on my team, and, let us help you get started from the very beginning to the very end. And, with that, I do want to get into our Homebuyer Workshop that I've been promising now for weeks that we're going to get into USDA. So, give us a call. It's 844-935-3634. We want to hear from you. We want you to get on the calendar. We want to get you ready. We want to get you prepared. We want to get you refinanced if you haven't done it already. Stop sitting on the fence, you guys. Come on. Come on. So anyway, let's do the USDA, huh? We ready?
All right.
Absolutely. It'll be just as surprising for me as everyone else.
Right? All right. And I think we got a couple of comments too, right?
Yep. Aunt Lori on YouTube says hi.
Nice. Aunt Lori, thank you so much. Love that you're following.
And then Mikey on YouTube says, do you have any other active social media platforms that you are on?
Thanks, Mikey. I can't believe my son's actually watching the show. Mikey, we do have social media platforms. So he's the big gamer kid, right? And he's the one that actually got me all started in this, and he put it all together. And now Matt's taken over and perfected things. But so Mikey, we do have Twitch. So hopefully you are my follower that's watching on Twitch at the moment, which I'm not really quite sure how you're doing that. Since you're not
I don't think it's him because he commented from YouTube.
Okay, well, there you go. Good. He was almost in trouble since we've got some grades going on right now, guys.
Right?
Telling you,
get back to work.
I'm telling you, everybody that is out there listening to us, we are normal, real people. I have got that kid that is in school, that is having a very, very hard time online schooling in high school. It has not been fun. It has been very difficult. I feel your pain. I am right there with you. Pain. I'm telling you, pain. Anyway, Mikey, I love you. So yes, we have got our Twitch, we've got our Facebook, we've got our YouTube. We are really, really bad about Instagram. We're going to try to get better about Instagram. And I don't know if there's any other social media platform. Obviously, we have our podcast. So if you guys like to listen to podcasts, every episode that we do is on the podcast. You guys can listen there. A lot of people are totally into these podcasts right now. That's it, though. I can't think of anything else. And Mikey, if you know of one that you think we need to be on, because that's where you're at, let me know. We'll get on it. We'll try it. All right, so I do need the PowerPoint to come up. We're going to do some USDA. One way that you guys can maybe have a little bit better opportunity at getting an offer accepted in these crazy times right now is to go find a house in a rural community. Go out to the middle of nowhere, to the boondocks, to the sticks. Many of you guys are moving. You are leaving because it is something new, right? Everybody's working from home. Their companies might be allowing you to continue to work from home. You don't have to go back to the offices. This is going to be a new standard. It's going to be a new way of work and living. And so that's why we've got our great, what are they calling it right now? It's the great, it's not the recession. They're all moving. I'm trying to remember. Do you know what I'm talking about, Heidi?
Roller coaster?
No.
No, I know what you're trying to say.
Migration. It's the great migration. I'm like, it's
Yeah.
not recession. We're not there. Not yet.
We're not there.
So
We
right
don't
now,
wanna get there.
right now it's the great migration, and everybody is moving because they're getting out of the cities. They don't need to be there. They don't need to be living in a matchbox apartment for a really expensive amount of money. They can get their kids out to, a home that's got some land and a backyard, and because they can work from home, which they could never do before. So USDA is actually an awesome loan program. It is super cool. and you're going to probably have a little bit less battle than you would if you were trying to buy something here in LA. So, maybe you guys want to stick around and stay tuned and listen to this one. So we're going to get started, and we're going to see if I can actually make it work. I have to hit which button? The play button, and then the forward. And Matt, you're on because it's not clicking through. You gotta love technology.
Yeah, I think the play button is what screwed it up because it was already playing.
Okay, but it's still not moving. Can you move it for me?
You just moved it. I didn't do that.
No, nothing's moving on the screen I'm looking at. So I don't know what you see, but I see nothing.
Oh, your presentation is moving. I don't know why that's...
There's nothing on our screen moving.
Hold
It's
on.
just sitting here. I was wondering why he got really quiet all of a sudden. He's like, wait, I see it. You're doing something. So let's see if we can pull it up so I can actually talk about some USDA.
Nope, that's not it.
Yeah. Maybe. You guys know it's real.
That's not it. Really? Click it again. See what...
What am I clicking? The play button?
The arrow, not the play, the next...
Nope.
Oh, hold on. I got to click back over. I forgot. Okay, try it again. That is
Nope.
so bizarre. It is moving over here, but it's not on your screen.
It is not.
Okay, hold
Not
on.
moving on YouTube.
We got it. We're just going to...
It is not moving on YouTube?
No, it's not.
Okay.
No,
I've got another option.
because I have to watch it, so I know what you're talking about.
Yeah, right? I know. So this is fun. This is how you guys all know that we are truly doing this live. This is a live show. We are not kidding around here. Oh, hey, that looks like it's halfway there.
Oh, hold on. Oh, yeah, now it wants to work. Hold on a second. Why can't I get it to go over there?
I don't know. We might be doing USDA separately.
Almost there. Hold on. Oops.
You got to tell us if you see something, Heidi.
All right, let's try that again. Go ahead.
All right, let's see. Let's try it. Nope.
Oh, hold on. Now try it. There we are.
We did it. All right. Okay, so we're going to go back to the beginning because we are going to actually put this up in the playlist on the Homebuyer Workshop 2021 playlist for the USDA program. So I'm going to actually start at the beginning like this is also being done separately. So I am Debbie Marcoux. I am the mortgage mom. And of course, we've got Heidi with me, Heidi Schlegel Points. And we are going to be talking all about USDA right now. So I can't actually see me and Heidi where usually I do at the bottom, Matt. Do you know what I'm talking about?
I'm working on that right now.
Okay, but now that you did that, I can't push through again.
Oh, sorry.
That's all right. So he's going to get us in the corner so you guys can actually see our faces, but he's also going to go ahead and hit forward for me so we can get off of the slide and onto the first slide for the Homebuyer Workshop. So best way to get hold of us, what do you guys do? Well, you want our phone app. That is for sure. We just talked all about how it is so important in this market to be prepared to make your offer. Best thing you guys can do is text the word MOM to 36260. That way you guys will get the link to our phone app and you can run all of the payments that you need. You can apply for your loan. You can watch us live on Wednesdays. You can just about do anything that you need to do. You can email us, call us, anything that you need. But the calculator is awesome. And one of those calculators that are an option for you is USDA, which is going to be the program that we are going to talk about today. So I want to make sure that you guys know how to use that calculator. If you don't know what to put in all of the little places that you do have to input information, that is when you're going to hit the email me button and you're going to actually ask me what you should be putting in those areas. So you're going to put in your purchase price, of course, the amount of your down payment, your percentage. If it is a USDA loan, it's 0 down. So you would put a 0 in there. You're going to put in an interest rate. So that's where you need to send me a quick email and say, hey, what do you think that the interest rate today would be? And I'm going to go ahead and tell you what to use for the program. Property taxes, depending on the county the state that you are looking in. You all know that we're licensed in numerous states. I've got about 11 at the moment and always continuing to grow and add. So depending on the county and the state that you are looking in, I'm going to tell you what to use, what is common for your area for the property tax percentage. And then for your homeowner's insurance, same thing. If you, all you Texans, you guys have got some really expensive insurance and some really expensive property taxes. So you just want to make sure that you're reaching out to me and I can tell you what to put in there into those areas. And then from there, you guys can window shop all you want on your Redfin, your Zillow, everywhere you need to go. And you can run those payments and see if it's something that you feel would be affordable for you. So once again, text the word mom to 36260 and get that phone app, save it to your home screen. It's going to text you the link. You're just going to click on it, save it to the home screen, and you are in business and you are ready to go. So we are going to switch to the next screen. Best way to contact us, mortgagemomradio.com. Go to the website, put in your information. You can send me an email by contact us. You can go into what you want to know about interest rates or purchase information. What is my home worth? You're going to fill out a bunch of information that is going to send a form to me. And I am going to reach out and we're going to talk, you and me, one-on-one about your scenario and get you all ready and going. So that's mortgagemomradio.com. Obviously, you guys can watch us on Facebook. You can watch us on YouTube. You can call us. And hey, we would love it if you guys would spread the word. Either go to give us a Google review if you like these workshops, or give us a Yelp review. We really, really appreciate it. It helps us get the word out. It gets the algorithm out there. It gets the information out there. And, you know, more people are benefiting from the information that we are providing. So please, if you don't mind, do that for us. We'd really love it. If we've helped you, we'd really appreciate it if you'd helped us. For all of you that are out there right now, that are listening, if you guys can do it, I haven't asked you throughout the show yet, but if you guys can give us a thumbs up on the show, that would be huge. And we'd absolutely love it if you would subscribe to the channel or follow it if it's on Facebook. But if you're on YouTube, please subscribe to the channel. Click that notification bell so that you know when we do go live. It really does help us out quite a bit. So please, if you don't mind doing that. So in the past, I'm back at the loan program screen that you guys have seen in previous workshops that we've done. And we've already gone through conventional loans of Fannie Mae. We've gone through the VA loans for our veterans. We've gone through the FHA loans. We've gone through jumbo. Now we're going to hit USDA. If you want to know more about those programs, it is super simple. You're already here. You're on YouTube. Go to our playlist, Homebuyer Workshop 2021. You can click on any one of the videos that we've done that talk about the different loan programs, and you can learn all about that loan program that you want to know more about. So all of the programs that you can see on your screen right now, we have talked about, USDA being the last one. And not next week. We are actually dark for the holiday. But the week after, we're coming back and we're going to talk to all you self-employed borrowers about bank statement programs. So we've got so much good information going that if you subscribe and you turn on your notifications, you will know when we come up next. You'll know when we upload the next workshop video, and you will not lose or miss out on anything. So if you guys have any questions, you guys are watching, you want to say something, please put it in the feed. We're going to read it out loud. Matt's going to let us know, and we're going to make sure that we answer it for you.
We do have Dear God, It's Me on YouTube saying, I'm going to learn something today. Oh, it's me, Mom. Sorry, I missed the end of that.
Dear God, it's me, Mom. So that's actually Heidi. That is her podcast that she is doing, all about kids and moms, and it's a good one. And she's going to learn all about USDA today because she knows it, but it's not her specialty. Right, Heidi?
Yes.
Uh-huh.
It's been a while since I've done it.
Yeah. But come on, you could do it. You can do it. I swear. All right. So USDA loans, what is really important to know? So number one, like I mentioned before, it is 100% financing on homes in rural areas. Believe it or not, there are areas that are USDA eligible that are not far away from Los Angeles County. And there are some in Los Angeles County. So if you get into areas that are out there like Acton, Agua Dulce, you get out towards Victorville. You get out some of the areas towards Palmdale. Heather, you're sitting right here. Give me one that you know is rural. There you go. Fillmore, Santa Paula. I got a real estate agent sitting right here in the office with me at the moment. There are a ton of areas that, believe it or not, are USDA eligible, even here in California. If you guys are living out in, Idaho and Texas and Arizona, there are a ton of areas where you could qualify. Georgia, Tennessee, right, to get this USDA financing. So it is zero down, which is absolutely amazing. The family income is based on the size that let me go back. The income that you are allowed to make to qualify for this program is based on the size of your family. So if you are married, you've got some kids, you might have your mother-in-law living with you, that it is all based on how many people are in the home is what determines how much income that you can earn. So it's not one of those standard, what is the median income? Okay, you can make 80% of the median. That is not what it is whatsoever. So they are actually pretty generous numbers. And again, if you want to know if that's something that you might qualify for, best thing to do is to use that handy dandy phone app or go to mortgagemomradio.com, contact us, send me a message, send me an email, let me know that you have a question. What is it? Oh, well, I make X amount. I have this many kids in my home. I might ask you a couple more questions, but then at that point, I'm going to ask you, well, where are you looking? Give me an idea. And I'm going to look it up and I'm going to tell you what your income level can be. So we're going to make sure that we go through that with you. Another great piece about USDA is that there is no monthly mortgage insurance. It works very, very similar to a VA loan. So a VA loan, you don't pay a monthly mortgage insurance either. And they've got what they call as a funding fee that you do pay up front. It gets financed into your loan amount. So you actually end up financing more money than what you bought the house for, since it's 100% financing plus the funding fee. USDA is almost exactly the same. So you are going to actually finance their fee up front, their mortgage insurance fee up front, but you are not going to have a monthly mortgage insurance payment. At the end of the day, it does actually make the monthly payment cheaper than it is with a conventional loan, where you would pay mortgage insurance on a monthly basis if you don't have at least 20% down. Now, going back to conventional, which I do want to mention, is that you can get out of mortgage insurance even with less than 20% down, but you've got to go back and watch the conventional video that we did with all of the information. So this is not a conventional loan, but on the average workshop, but on the average standard, what you're going to hear is that with a conventional loan, you need to have at least 20% down payment to not pay mortgage insurance. USDA, you will not pay mortgage insurance. Period. Zero down. Pretty cool. So the USDA program, it really is awesome. Again, it's for rural areas. So you do need to make sure that it's going to be in an area that you want to go to. Depending on that area is what determines the income level that you can be at, plus how many people do you have in your home and how much are y'all earning. So those are really the basics of USDA. It's a great product. It's a great program. A lot of people don't understand it. They just don't know it. They don't do it very often, but something that is just fantastic. So if you have thought about moving again out, getting away, and you're trying to figure out how am I going to buy a home, and you've been living in one of the big cities that has made it very, very difficult to save money, this just might be your option. This might be your chance to do it. So reach out to us. Give us a call. It's 844-935-3634. Text the word mom, 36260. So text the word mom to 36260. Get that handy dandy phone app on your phone, or go to mortgagemomradio.com and send us a message, hit contact us, and email me, and I'm going to respond right away. So I'm pretty sure when I click this next button, we are going to go to the bank statement program. So we're going to stop right there. We're done for the USDA program for today. But like I said, not next week. We are dark because of the holiday. But the week after, we are going to be talking about bank statement programs. And on bank statement programs, you do have to be a self-employed borrower. So once again, I am Debbie Marcoux, and I've got Heidi Slagle-Points. And what did you think, Heidi? Did you learn something?
Yeah, it's really not that hard.
It's not. That's what I was telling you. You just haven't done one in a long time. That's all.
Yeah, it's been years.
Yes, years.
So.
But I do them. I've done them quite frequently, to be honest. And they just happen to be ones that Heidi hasn't worked on. She loves those bank statement loans, though. I'll tell you that.
I do.
You do.
I do.
You do.
Those are easy for me.
Right. Yeah. And I don't like them at all.
the simple loans are very hard for me.
Yes.
I don't know why.
Yes, I hear you. I hear you. But the USDA, it really is. It's not complicated whatsoever. You just really do have to fall into that criteria, and if you do, it is truly a fantastic loan. You do have to have a minimum credit score of 660, so it is a little bit more stringent than a standard conventional loan or an FHA loan where you can go down to a 580. You know, so it is a little bit more strict in that credit guideline. So that is something important to think about. But that's also part of that planning. It's part of that workshop that we do with you to make sure that we are getting you in position to buy. So if that is the kind of loan you want and that's where you want to move to, and that's going to punch all of the right pieces and your income's in the right place, but your credit's not, then we're going to work on a credit plan. And that's going to be step number one. And then, you know, step number two, we're going to get you out there and buying a home.
Made me think of my older kids.
Yeah, exactly.
Like,
They could go buy a house. Yeah.
Right.
With that, though, I think that we're done for the day. Is there anything that you want to bring up, Heidi, that you want to round out the show with?
No, I think that was a lot of good information. I think it was a lot of information. So I think I'll let people kind of rest on that and sit on that for a minute. And, you know, I guess we'll be back in 2 weeks.
We will. Because we are dark for Easter. We hope that everybody that does celebrate Easter has a wonderful holiday with their family, that you enjoy it. And, you know, I hope that you guys get lots of baskets and eggs and bunnies and
Absolutely. So,
all the good stuff. I did hear that, so I think we do get Peeps for Easter, but I think Peeps stopped making it was the Halloween pumpkins, right? You know, the marshmallow Peeps.
The marshmallow Peeps.
I believe that due to COVID, I think that they had to actually select which one. And so
I did hear they stopped making Peeps, but I thought it was just like the regular Peeps.
No, I'm pretty sure that they're making they're making the bunnies. They're doing the bunnies. They're just not going to do the other holidays, and it's because they just couldn't. They couldn't,
right.
like, you know, with financially or whatever the reason was. But
right.
yeah. So if you guys are Peeps lovers, make sure you go out and buy a ton of them.
Right.
Plus, we all know that we open the packages and let them sit out for 3 or 4 days to get stale anyway before we eat them, because that's how they taste best.
Right. No one eats them right away.
No, nobody does. But we are not on next week. We are gone. We are dark. So if you're looking for us or trying to find us and you can't, that's why. But we will be back the week after that, and we'll be bringing you all kinds of great information and updates and what are the rates doing, and, you know, talking all about everything that we did just like today. But we'll be going through the bank statement program. So I think today was a great show. Lots of valuable information.
Yes.
And if you guys want to get on the calendar, you want to talk to us, it's 844-935-3634. Give us a call. You can schedule that appointment. We want to hear from you. We want to talk to you. And go to the website, mortgagemomradio.com. Listen to the podcast. Get that calculator. It's awesome. Text the word MOM to 36260. And, you know, we'll be back in 2 weeks. We'll hope you have a good one.
Have a great couple weeks and a great holiday.
All right. Bye-bye, guys.
Bye.